Have you ever heard that reverse mortgages are dangerous or that they come with hidden traps? Perhaps you've been told that you'll lose your home or leave your children with an enormous debt burden. Are these claims based on truth or are they just myths? Let's watch 5 myths about reverse mortgages. But before you watch these misconceptions, make sure to give this video a like and subscribe to our channel to our next videos. Myth number 5. You can't get a reverse mortgage if you already have a mortgage. Many people believe that if you still have a traditional mortgage on your home, you won't be eligible for a reverse mortgage. This myth can be particularly alarming for those who are approaching retirement age and are still paying down the regular mortgage. The truth: you absolutely can qualify for a reverse mortgage even if you have an existing mortgage. In fact, one of the major advantages of a reverse mortgage is that it can be used to pay off your current mortgage, effectively eliminating your monthly mortgage payments. This can ease a significant financial burden, especially if you're on a fixed income during retirement. The way this works is simple. The reverse mortgage will provide you with enough funds to pay off your existing mortgage, and you no longer have to worry about making those monthly mortgage payments. This can be a huge relief as many retirees find it difficult to continue paying a traditional mortgage after they stop working. By using a reverse mortgage, you free up cash flow, giving you the financial freedom to enjoy your retirement without worrying about meeting monthly debt obligations. Some homeowners may even qualify for a reverse mortgage that exceeds the amount required to pay off their current mortgage, allowing them to access additional funds. This can be used for other purposes, such as home renovations, medical expenses, or simply improving their quality of life in retirement. Myth number 4. Reverse mortgages are too expensive. It's easy to assume that reverse mortgages must be expensive due to their specialized nature. People may have heard that they come with high fees, escalating costs, or confusing interest rates. This can cause a lot of fear and hesitation, especially if you're already living on a fixed income. The truth: like any financial product, reverse mortgages come with some associated costs, but they are far more manageable than many people think. The primary costs involved are the closing costs and interest that accrues over time. However, the key difference between a reverse mortgage and a traditional loan is that there are no monthly payments required. Instead, the loan balance, along with any accumulated interest, is repaid when the home is sold or when the homeowner passes away. This can make reverse mortgages a much more manageable option for retirees who are looking for financial flexibility. The costs can vary depending on the size of the loan, the lender, and the specific terms of the reverse mortgage. Some costs, like the initial closing fees, can be rolled into the loan, which means that you won't have to pay them up front. Additionally, the interest rate on a reverse mortgage tends to be higher than on a traditional mortgage, but since you don't have to make monthly payments, this is often more of an inconvenience than a financial burden. What many retirees find, however, is that the benefits of the reverse mortgage outweigh these costs. The ability to access cash without having to sell the home or make monthly payments can be invaluable, especially when living costs and healthcare expenses continue to rise. Myth number 3. It's just a last resort for people who are out of money. Perhaps the most damaging myth about reverse mortgages is the belief that they're only for people who are financially desperate and have run out of options. This stereotype paints reverse mortgages as a tool of last resort, something only those in extreme financial hardship should consider. The truth: this couldn't be farther from the truth. Reverse mortgages are actually a strategic financial tool used by many homeowners, even those who aren't in financial distress. In fact, many financially stable Canadians use reverse mortgages as part of a broader retirement planning strategy to increase their income, delay the withdrawal of RSPs, register retirement savings plans, fund home renovations, or help adult children buy their own homes. Reverse mortgages provide flexibility and control over your retirement finances. For instance, you might decide to take out a reverse mortgage to preserve your savings and assets, allowing you to continue enjoying your retirement without depleting your resources. You may even use it to enhance your lifestyle, whether that means traveling, making home improvements, or simply having more disposable income. Far from being a financial lifeline only for the cash-strapped, reverse mortgages are about providing retirees with additional options to optimize their retirement and achieve financial goals. The myth that they're only for people who are broke simply doesn't hold up. Myth number 2. My children will inherit my debt. This myth has been one of the most persistent misconceptions about reverse mortgages, and it's one of the most concerning. Many people fear that by taking out a reverse mortgage, they'll be leaving their children with a massive debt to pay when they pass away. Naturally, this can discourage people from exploring the option of a reverse mortgage. The truth is that reverse mortgages are specifically designed to protect your heirs from inheriting debt. When you pass away or sell your home, the reverse mortgage is repaid from the sale proceeds. Any remaining value from the sale of the home is then passed on to your estate or heirs. In Canada, reverse mortgages come with a built-in no negative equity guarantee, which ensures that your estate will never owe more than the fair market value of the home when it's sold. This means that if the housing market drops and your home is worth less than the loan balance, your family won't be responsible for paying the difference. Your children won't be burdened by debt from the reverse mortgage, and they will still be able to inherit any remaining equity from the home. This feature is a significant advantage of reverse mortgages, as it protects both you and your family. It allows you to enjoy the benefits of your home's equity during your lifetime, without the worry of leaving a financial burden behind when you're gone. Myth number 1. I'll lose ownership of my home. One of the biggest fears about reverse mortgages is the belief that you will lose ownership of your home. This myth has led many homeowners to shy away from considering reverse mortgages, as they fear that they'll be forced to leave their property or give up control of their home. The truth: this myth is completely false. When you take out a reverse mortgage, you remain the legal owner of your home. A reverse mortgage allows you to borrow against the equity in your home, but it doesn't mean that you lose ownership. As long as you continue to live in the home, maintain the property, and pay property taxes, you can stay in your home for life. In a reverse mortgage agreement, the lender doesn't own the property, they simply have a claim on the equity in the home. When the home is sold or when the borrower passes away, the loan is repaid from the proceeds, and the remaining balance, if any, goes to the borrower's heirs. But while you're living in the home, it remains yours to do with as you please. This myth often arises from a misunderstanding of the terminology and process involved in reverse mortgages. In reality, a reverse mortgage is a way to access the value tied up in your home without having to sell it or move out. It's a powerful tool that allows you to enjoy your home and its value for as long as you live there. Reverse mortgages are an incredibly valuable tool for homeowners over 55, offering financial flexibility and peace of mind in retirement. Unfortunately, many myths continue to cloud their true benefits and discourage people from exploring this option. We've debunked some of the most common myths today, but the truth is that reverse mortgages can provide you with the financial freedom to enjoy your retirement without the stress of monthly payments or worrying about leaving a financial burden for your heirs. So are you ready to learn more? Check your eligibility today or speak to one of our mortgage advisors. Now share your thoughts in the comments below. If you found this video helpful, don't forget to share it with others who might benefit from learning about reverse mortgages, and remember to like, share, and subscribe to watch more videos like this, and stay with us as we continue to explore more tips, opportunities, and financial strategies that can help you live your best retirement.